say supply and demand zones,
Yeah.
I'm basically referring to order blocks. Yeah, there are two types of order blocks. There's a supply and the demand. So the double top is in the supply area, and the double bottom occurs mainly in the demand zones. And that is where I execute my trades. I do not just enter a market for, no. I wait for price to come to my zone, be it demand or supply, and then I wait. What is I wait? Basically, I look at what the candles are doing, how the market is playing, and whenever I see, now referring to candlesticks, I am going to ask you guys to enter. Okay, I'm going to ask you guys to do some research on how to draw order blocks, and learn how to spot them. Yeah, just be practicing on how you can be drawing order blocks, and then also the candlestick patterns. Does any of you have a candlestick that's called a candlestick Bible? Do you guys have it? It's a book with candlestick patterns. Does anyone have it? Or tumujiwulirangako?
Tuwagiwulirako.
So I'm going to ask you. You go and identify and understand them, but not all of them. I'm going to give you the ones that I want you to look at. Then you go and look for them and understand how they work. Now, like I said, now how do I trade? Let's say, are you seeing my screen?
Yeah.
Yes, tujiraba still.
Okay. Now, how do I trade a double top? Now, I'm going to assume this area here. I'm going to assume prices at supply. So, whenever you see a double top, mainly these ones they will occur in the lower time frames, because I'm a 4-hour guy. On the 4-hour, what is a bearish candlestick pattern? It could be an evening star. An evening. Let me show it to you how it looks like. Let me show you how it looks like. Yeah. You're seeing this?
Yeah.
Mujilava. Hey, guys, am I talking to myself over?
Yes, tujiraba still, tujiraba.
Iraba.
Nga serious.
Akatura message wera. Tuba twemutinze kubanga tuba tetwagala background sound zisobora okujja ku mulamwa.
Okay.
Yeah.
Now, this trade here, this occurred on the 20th of November. Solana. It's a Solana USDT pair. Now, price came to my supply zone. Yeah. And the supply zone, an evening star formed. Basically, with an evening star here, I know the price is coming down, but that doesn't give me strong enough reason to open a short trade. I have to go to the lower time frame to see what is happening there. Now, as you can, this is the 1 hour. It's the one. Now, it's still not clear. Now this is the 30 minute. You see the 30 minute? Isn't this similar? This pattern here, isn't this similar to this drawing here? Are you seeing that?
Yeah.
It is similar, because you will not get the market is not perfect. You want to get a perfect match, but you will get something similar. So this here tells me she's a head and shoulders in a supply area. This tells me price is going to go down. Yeah. So then I can even go down further to the 15 minute. The 15 minute is also telling me that's a head and shoulders. So how do I trade the head and shoulders pattern? How do I trade it? It's very simple. Let me come back here. I'll illustrate something for you here. For head and shoulders, price will form the head. So let me just get my annotation. Sorry, we're discussing here. Make a pen. Yeah. Okay. Okay, now I want price to do this. The yellow line that you're seeing there is the neckline. The price has been respected. I want it to break that neckline, come back and retest the neckline, and then continue going down. Now, at the neckline, after price has broken that neckline, so price breaks the neckline, to give me confirmation to put a short order, an order limit, to sell, for a short. So bring down here. So I like using a laptop, but there's no power at the moment. And I'm just using my phone. Here I'll put, of course, a 1.3, 1.5 to 1.7 percent. And then my take profit, I'll put a 2%. A 2%. Depending on how the market is going. But I usually take 1.7 as my stop loss, and then 2% as my take profit. But most times, if I don't rely on percentages, I'll just take a 1.4, a risk reward ratio of a 1.4. If you want to be safe, go for a 1.3. Yeah, at least here you're guaranteed price is going to hit your risk reward ratio. So you do not place any order until price breaks the neckline. When price breaks the neckline, you'll be waiting for, after price breaking the neckline, you place your order on the neckline, because automatically price has to come back there and then continue going down. This happens 70% most of the time. 70% most of the time it happens. Yeah. You can go back here and I show you as to what happened here. See, price broke the neckline, as you can see here. Price broke the neckline and then it went back up. Yeah, it touched the neckline and then it continued. So me, I just place my order on the neckline and then I go away. I put my stop loss and my take profit and I go away. No stress. If price hits my take profit, well, I'm gone. If it doesn't, it's okay. It's okay to lose. Yeah. Why? Because I'm comfortable losing a 1.7%, maximum 2% of my trading capital, of what I'm risking. Now about even the risk management, I'll tell you to come in later. So basically, this is how you trade double head and inverse, head and shoulders. This is how you trade them. Price will break the neckline to come back to the neckline, and then before it touches the neckline, you already placed your order before shorting, and then price will what? Come back, touch your neckline, and continue going down. No hassle. Then also this one here, this pattern here, as you can see, this candlestick pattern here. I was explaining this in the afternoon, but I didn't have, my battery was low. I remember Mr. Jero said this is a bullish engulfing. You're right. It could be a bullish engulf. At the same time, me, what I'm seeing, because everyone has a different interpretation of what they're seeing. For me, what I'm seeing here is a tweezer top. These are tweezer tops. Yeah.
Ekyambadde nnyinako kyensaba.
Mr. Joel,
Yes.
eyo candlestick pattern ebaddemu another time frame naye nga si eno kati.
Yeah. See, this is a different example.
Yeah,
So
naye ate candlestick eno olaba Mr. Joel. For me, I can interpret it that the market is ready to fall down, which I can call it bearish engulfing.
Like I said, there are no wrong answers here because everyone interprets the market differently.
Yes.
Yeah.
Yeah.
So for me, what I'm seeing here is a tweezer tops to me, because
Yes.
I'm comparing it to this one here.
Yes, actually are the
This is
same.
also, yeah, it's also a tweezer top. Well and good. That's the 4 hour and the 4 hour time frame.
Yeah.
And remember, it is near my supply area. This red part here is my supply. Yeah. So now if I go down to a lower time frame in the 1 hour, the 1 hour.
Mr. Joel.
Yes.
Kampiseewo kano bayinza okulaba ng'otulaga candlestick pattern oba on how you approach the market. Kati bo ne bagenda ku Binance ne basanga ene coin yonna gye basaaze ne balowooza nti eyinza okubawa okubalaga kyekimu nga kino ky'oliko. Kubanga si buli coin yonna nti egenda kulaga ekituufu mu candlesticks.
Yes.
Kubanga many coins there are very manipulated. So olina okulaba nti coins ng'eno BTC tebasobola gimanipulatinga, ne coins nga Solana, ne coins nga Shui, kale coins ezo ezirina ezitandikira ku billions of market cap, billions. Oba billions. Togeza n'ogenda mu coin ng'eyina millions of market cap, olina okusooka n'ogikebera n'olaba eyimiridde etya. Awo n'osoma candles n'ojingira, kubanga coin eyo tebagimanipulatinga, naye ate zino z'olaba ku Binance kyokka olaba abantu abasinga abafiirwa ssente zaabwe ku lw'okuba nti omulaza wano candlestick pattern n'omulaga bukya akatale bwe katambula, kati ye n'agenda eri n'asangawo akacoin nga kalina 10 million of market cap, n'alaba chart n'akayingira, ebyaddala akacoin ako tekayinza okumulaga ewa coin gy'eva oba gy'eraga. Just ako oba olinga agambolinga bugambolinzi, kaba very very risky okuggyako coins zino ez'akabi.
Yeah, you're right, Mr. Jero.
Kyekyo baganda bange beerezaamu otuyigirize.
Nange mbadde nnyinako ekibuuzo kitonoko. Tikya mbadde nsaba like oba tugende step by step, kuba kati ndaba tudduseemu speed, waliwo twasookedde ne tudda ewaddako, kati we are very far, naye I guess abasinga ffenna tusigadde.
Okay.
Yeah. Thank you so much.
Yeah. Where are you? It's like, where are you exactly?
Nze nakomye wali we twasookedde ku, it was bane babwa yabadde kyezugundi ze twadde sookeddeko kando.
Evening star.
Shoulders.
Okay. Now it's like this, eh? I'm very sorry. You have to forgive me. It's like
Okay.
this. I was showing you, first showing you how I trade them, and then later on, I'm going to show you how step by step and how the process
Goes.
what
Mm.
goes.
Mm.
I'm just showing you how to trade double tops and head and shoulders or double bottoms. I'll show you how I trade them. Then later on, then I'll go step by step. Now here I was just showing you what you're to look out for in the 4 hour. So let me first show you how I trade them, then I'll go step by step.
Okay, thank you so much.
Yeah. But okay. This one here, okay, tweezer top. The tweezer tops in the lower time for 1 hour. This is chain link, by the way. This was on November 20th. Chain link, in the 1 hour. Okay, in the 4 hour, we got tweezer tops. Yeah. And then in the okay, then in the excuse me, in the 1 hour, what we're seeing is an evening star. Keep in mind, evening stars. Yeah, this evening star here is somehow different from this one. But once you understand, once you get basically you understand this, the more you practice it, the more you see them, to be very easy for you. Yeah.
Okay.
Yeah. So let me just show you how I think them. Okay. So in the 4 hour, remember after drawing your zones, your supply zone, then your demand zone. Then in the 4 hour, you wait for price to either come to your demand or supply. So right now here, price was moving from our demand to heading towards supply. And then we had a reaction. What I saw here, I saw a tweezer top, like the previous price action here. So what I did, I moved to the lower time frame, the 1 hour on chain link, and I saw an evening star. Basically, it's telling me price is going down. Yeah, but still it wasn't enough. It's not enough confluence for me to think it to short. And I went down further to the 30 minutes. In the 30 minutes, this was very, very good for me, because up here I saw up here. To me, this is a double top. At the same time, someone else can see this here as what? As a head and shoulders. Sorry. Someone can see this as a head and shoulders.
Okay.
You see that?
Yeah.
This you gain this perception. You learn how to see these things the more you start looking for them. Right now they are a bit confusing. Yeah, so let me just stick to the simple ones. What we're seeing here, up here, is a double top. Yeah. I went down further in the 15. 15 also confirms the same thing. What we have is a double top. And once I see this, I am very happy. If everything is lined up from 4 hour to the 30 or 15, I'm very happy, and I have more confidence to short the market. So all I'm waiting for in the double top scenario. Let me come back here. Sorry. In the double top scenario, in double top scenario, like what we're seeing here, price will come up like this. Yeah. And then to form a neckline. See the yellow line? That is my neckline. And then I want price to break this neckline and then come back to retest that neckline and then go down. So my entry will be at the neckline. So once I see price has broken the neckline, I'm very happy. All I do is I put a limit order, a short limit order.
Yeah. Yes.
Then of course, then of course I put my stop loss. I usually take a 1.7. 1.7, and then 1.7, and then of course my TP, I push it to 2%, either 2%, the most. I'm not greedy. I'm not greedy, depending on how the market is moving. Yeah, but this most times it could 2%. Yeah, it will hit. But if you're a very cautious person, then I suggest you use. You can just take a 1.5. 1.5. Although your risk reward ratio won't be that good, but you'd have what? Won the trade. The most important thing here is to win, have more winning trades than what? Than more losses. Or you can have more losses, but your winning rate, the ratio of your win is bigger than what? The loss. By the way, losses are normal. Losses are very normal. It's not that what can keep you going back is your level of course psychology and all that kind of thing, and also how you manage your capital. Don't get all your money and just throw it there, boom. No, don't do that. For me, I usually use 2%, maximum 3% of my capital. Let's say I have $100. I'm even diverting it to something else. Yeah, I'm going to use 3% of that $100 to play with it. Then the rest, I'll think. Yes, the rewards may not be that, big, but I'm saving my capital. Capital is the most important thing in this thing here. If you lose your capital, that means you won't have any money to play with. So anyway, this is how I trade double tops. Wait for price to break the neckline, come back, touch the neckline, and then it will go down automatically. It happens 7% most of the time. It happens 7% most of the time. Although there are days where there's serious manipulation and price will just come back, boom, take you out, and then continue going up. So now, for the double bottom, it's very simple. The double bottom, you just have to you have to think it this ups. It's the reverse of the double top. Where's my path? Double bottom price will come and touch the neck. The first to make a lower low, a higher low, and then to go up, and to come back down to the original lower low, or what, or higher low, and then to go back up again. Sorry, price will just do. What am I doing? Anyway, not having a laptop here. I'm not using the phone. Okay, like this, like this. Come back, and then like that. Make a horizontal line. If I do this and this. So a double bottom price will come in your demand zone. This what happens in a demand zone. Yeah, price will come and play in the demand zone, and to break the neckline. Once it breaks the neckline, very good. I just place my limit order for a long. For a long, boom, like that. Take my 2%, and here, depending on the situation, it could be a 1% or 1.7% or 1.5, like that. Then price will what? Will go up. It happens 70% of the time. Now, basically, let's wait. These ones were, oh, this is for short. I'm going to share with you this document here. These are my trading notes. Whenever I trade, I write down what I'm learning. Let me share. This is a particular one for live examples. Where was it? Oh yeah, here it is. As you can you see this one? Yeah? It's a bit. Is it clear for you guys?
Yeah, it's clear.
Okay. Kakati, as you can see here, we were in a demand zone. Price came down like this, and then it went up. So this is the 4 hour. This is against the Solana, as you can see here. Solana 4 hour. Yeah. This pattern here, that is a bullish. Sorry, yeah, it's a bullish harami, or what you call a pregnant what? Candlestick pattern. So now we want to catch this move here going up. This is what we want to catch. So what do you do? Once you see this candlestick pattern here, you go to the lower time frame. In the lower time frame, as you can see, Solana 1 hour, very clear and perfect. You see this? It's a double bottom. Boom, price come back, and then went up. They retest and then continued. Yeah. Let's go to us further to the 15. The 15? Oh, sorry. Okay. Here I'm showing you. This is my neckline was here. And then, of course, when you're trading double bottoms, you want price to come down. Yeah. And the first low where price bounces off will be your area of interest. You can draw your box. If the candle has a wick, like this one here has a wick, this red candle here has a wick. So your box will be at the close of the candle towards